Hey fellow investors, it's Thursday, December 3rd, 2020. I'm Hoda, co-founder and CEO of SPLUNK, and here's a recap of the market's noteworthy movements today. The market was doing fine all day. However, just before it wrapped the day, a massive sell-off sent the S&P 500 index into the red zone. On the positive side, the new jobless claims report came at the lowest level since the pandemic. However, on the negative side, Pfizer announced it has supply chain issues, which would force the company to slash its plans to release COVID-19 vaccines by half during the 2021. Shares of ZSCALAR were up by more than 26% on Thursday. This is a cybersecurity company, and it announced its latest quarterly earnings report and topped the analyst expectations with its performance. Revenue was up more than 52%, and while the company is not profitable yet, it has a lot of cash and generates free cash flow, which means it can continually invest in its growth, and that's why the stock was up today. Shares of SPLUNK were down by more than 22% today. The company is among the key IT infrastructure platforms that help large enterprises monitor their systems' performance effectively. As companies all around the world transition to digital operations, the demand for SPLUNK's platform is on the rise. There was no surprise at the company's quarterly earnings report. From the revenue side, the revenue was up double digits. However, some of the expected large new contracts didn't go through, causing a semi-panic among financial analysts about possible internal issues within SPLUNK's sales organization. Analysts raised concerns about the change in the sales leadership and the potential impact of such leadership changes. It didn't also help that SPLUNK had already assured investors of its expected annual outcome in its Investor Day presentation a few weeks ago. However, during their latest earnings report, which I personally listened to, the company suddenly withdrew its forecast for the year. These kind of actions created uncertainties in the investor's mind, and as you know, the stock market hates nothing more than uncertainty. Consequently, the stock paid the price. This is a stock I'm adding to my own personal watch list for a chance to pick up shares at a reasonable price. So if you watched the movie The Big Short, you must already know Dr. Michael Burry, who famously shorted the mortgage-backed securities that caused the market's 2008 crash. This medical doctor turned stock market investor now has a new short target on his mind. This one is, wait for it, do you have any guesses? It says it's called Tesla. Dr. Burry took it to Twitter platform to advise Elon Musk to issue new shares at these current ridiculous prices and announced he's shorting the company's shares. The Twitter thread is now either deleted or taken private. Nevertheless, if Tesla does crash, this is going to be the new big short of the decade. I, by the way, own shares of Tesla, and this makes me wonder whether Dr. Burry is onto something. Alright, that's it for today. If you like these quickly noteworthy movement reports directly from my daily stock market research, please like and subscribe and share it with your fellow investors. I'll see you tomorrow.